stock are you looking at? The first mid-cap mania of 2017.
That's right, Anuj. And the stock that we're talking about today is Maharashtra Seamless. What does the company do? They're basically into pipes. So they're into seamless pipes, as the name suggests, and also they're into ERW pipes. To make this more simple, then we'll focus on their clients. Who are their clients? The clients basically are ONGC, Oil India, and various other private explorers as well. Besides that, they get some demand that's coming in from the power sector as well. And importantly, downstream refineries. We talk about the Euro 6 norms for auto segment. Now, there are Euro 6 norms as well that need to be adjusted for even in these refineries. And in fact, they need to go for expansion of their sulfur recovery plants to meet the Euro 6 norms. And that's what could give some kind of fillip to their demand, because currently the capacity utilization is not very high. If you take a look at the shareholding pattern as well, promoters holding roughly 60% stake, and a whole host of big funds, they hold quite a large chunk in the company. So more than 15% is held by various well-renowned names as well. But I was looking at the promoter holding, and in fact, they have been creeping into the open market. So they've bought roughly around 2.5 lakh shares or thereabouts in this fiscal itself. So that's another factor that stood out. But why really the company did come on my radar is because I was just taking a look at all the market capitalization and companies that don't have very large debt or virtually no debt. And the cash balances, these are picked up from the company's website itself. They put a presentation. It's more than 1,000 crores that they have in investments. And the market capitalization is roughly around 1,700 crores. So that's what protects the downside risk at least. Even the first half of this year has been very good. Top line growth has been nearly around 20%. This is for the first half of the year is what I'm talking about. But importantly, now they're delivering an operating profit versus an operating loss. And at the halfway mark, they're also giving you a net profit that compares with the net loss, as that clearly states. Now, the company has said that the demand from the oil and gas space has been good. That's what's helped them. And also they're focusing on profitability and the cutting cost as well. That's what's given such a good performance in the first half of this year. What I don't like or I'm not very comfortable with is that in fact the order book is sufficient only for one quarter. They're doing around 250, 300 crores in one quarter itself. And in fact the order book is only around 308 crores. That's the number I've got from their website as well. Finally, I'm always worried when I look at these steel and tubes, etc. They've got good protection that's coming in from the government of India. There was a recommendation that came in earlier this year. And in fact, that has been notified on December 9th as well. So that's the company. Rather interesting one. Good first half of the year. Let's see how the second half of the year does pan out. ONGC is the big one over there. Maybe with the crude demand going up, maybe that order book can increase. I was trying to reach out to the management. Capacity utilization not very high. There is some capacity coming on stream in the fourth quarter as well. Watch out for this stock.
Okay, Nigel, thanks a lot for educating us about that stock. Just to repeat, this is not a recommendation from Nigel or from CNBC TV 18. It is just hardcore proprietary research from Nigel D'Souza. Thanks so much for that. Well, moving